Hi there, Serial Trader here. Happy New Year, and let's just have a look at the charts, and we'll go over the monthly and the yearly time frames as well, as we've just ended the month as well as the year. All right, so from Monday's price action there, we've basically just had an inside day. We stayed within the range of Monday's price range, so nothing substantial has happened yet. So the high of Monday was 25.20.27. And the low of Monday was 24.72.89. And as you can see, we stayed within well within both those extremes. So as is usually the case, it was a fairly light session going into New Year's Day. And tomorrow I expect perhaps a little more activity with a lot more traders coming back to their desks, although that may not fully kick in until next week, when basically everyone should be back in back in full action. Okay, so that being said, not a whole lot to update here on this wave chart. Still working that we have this minute wave 4 either complete or nearly complete, and that we should roll over and take out the extreme here that we most recently put in here at 23.46. That should break on this next move down if I'm on the right track, and we should go challenge this 1618 area, which is kind of in the mid 2200s. That also lines up nicely with this yellow trend line, which connects the two significant lows from the 2009 origin there. So that'd be a natural reaction, or a natural place to look for at least an initial reaction off of before going down beyond that. Just like if I can go up over here, this channel that we were in, that was basically the channel of the 2016 rally to the 2018 peak there. You see, once we came down, we had to test it, bounce off of it, go through it, go test it again, maybe even a couple times, and then finally it failed and we went significantly lower. It'd be fairly typical to see some sort of activity like that around this 2009 trend line if we are indeed going to go much below that eventually. It should provide at least some initial support. I don't know if I want to call it support, but provide a reaction point before trending lower once again. So yeah, still looking for a near-term top, either in place or ideally nearly in place, and looking lower from a trading perspective. If we do take out Monday's high, which is at 25.20.27, if we take that out, then we'll have to see how much higher we get, and if we start overlapping with these previous lows, that would start bringing the short-term wave count into question. But we'll only cross that road if we get to it. All right, so for the wave chart, that's probably all that needs to be said for now. And I'll go over the Thinkorswim candlestick chart. So on the daily candle, a little bit of a bullish hammer here. Pretty small though. I'm not sure how much weight I would give this, considering how light of a day Monday was. Kind of a pre-holiday session. I'm not really sure if any signals should be taken too seriously from that. But it is slightly above the daily T line at this point, and the 3T line in danger of crossing above the T line. So if we do have some continuation, we take out Monday's high and we get some continuation, maybe look for a move up to this falling 20-day simple moving average. That would be fairly typical to challenge, even in a downtrend, to come up and touch that. Or after that, maybe even this 50-day falling moving average, although I seriously doubt we're going to do that. I think we're going to roll over right away, but we'll see. Got to stay open-minded about these things. Okay, now that's the daily chart. Weekly chart. Now we haven't closed a new week since the last video, but as you can see, fairly small range so far, as we've just had that light session on Monday. This weekly candle will likely look a whole lot different after the week completes, but just to keep an eye on it. Now we'll look at the monthly, as we did just finish a month, so that should be interesting to look at. So on the monthly candle, Very large bearish engulfing monthly candlestick. Again, implying several more months to trend in this direction. So you see here we had that that doji candlestick monthly where we made an all-time high. That was the month of September. Then October we did a bearish engulfing, and then November a doji, and now December another bearish engulfing. So candlestick signals here on the monthly are certainly implying a lot more bearishness in the future. So we'll keep an eye on that. And then we also have the get on the yearly here, the yearly candle. And now that we did actually close the year officially, let's see what kind of candlestick we have here. Okay. So it was initially looking like a hammer, but now that we have a fairly long upper and lower shadow, basically a yearly doji. But importantly, you know, we closed negative for the year, so that's significant. Just to simply have a negative year is fairly unusual in this strong uptrend that we had been in. So that's certainly a change. And basically a potential yearly doji reversal candlestick. I mean, as you can see over here, this was the 2007 candle that marked the peak before we head into the 2007 and 2009 bear market. So that 2009 candle was also a doji. So you had a small real body and a decent upper and lower shadow, and that was a reversal candle. And then in 2008, of course, we had that big red candlestick, and then 2009 lower still, but then finding a bottom and starting to trend back up on an intra-year basis there. So we potentially have a yearly doji reversal candlestick. So that's fairly bearish on the yearly picture. All right, so we'll look at the next charts. I think we're done with SPX here for now. And we'll go to the Dow Jones Industrial Average. So on the Dow, decent up day on Monday there, but on Monday, but unable to take out the high of Friday. So still kind of an inside bar for the doji we did on Friday there. Obviously, I'm expecting the Dow to roll over with SPX. I can't see a whole lot of divergence between the three indices right now, as they are quite highly correlated. Everything kind of moves up and down together more or less, other than maybe some short-term divergences. These daily charts all look very similar. So yeah, Dow daily, not much to speak of yet. If we do break Friday's high, that could lead to a test of some higher resistance levels there, and obviously be a good sign to break Friday's low that we're resuming the overall downtrend that we've been in. On the weekly here on the Dow, let's have a look. Yeah, not a whole lot happening as we've just begun the week, and expect this candlestick to take a much different shape as we close on Friday. Dow monthly, since we complete a month, let's have a look at that. So on the Dow monthly, we are looking at a definitive bearish engulfing candlestick, very much the same as SPX. We had our bearish engulfing in October, we had a doji in November, and now another bearish engulfing in December. So certainly significantly lower prices are implied by this monthly formation. And if we look at the yearly, so yearly candlestick on the Dow, let's see what shape we've taken here. A yearly doji reversal candlestick potentially there, and obviously a negative year on a closing basis, so that's significant. So very much the same message as the yearly candle on SPX. Potential reversal of the overall uptrend since the 2009 bottom, and potentially kicking off a new bear market, a new downtrend. Okay, now I suppose on a yearly basis, if we take out the low of this candlestick, that would be good confirmation that the downtrend is continuing. And obviously we're expecting to take out these lows fairly soon, going off the daily chart, right? So we won't need to look at the yearly chart again until next year, but just to be aware, that would be a yearly doji bear break if we take out the low, which on the Dow would be 21,713. All right, so that's the Dow. We'll move on to the NASDAQ composite. And on the NASDAQ composite on the daily, I had Friday's doji there. Again, possibly a little hammer here on Monday, but I have my doubts as to how significant it is, given how light of a session it was pre-holiday. So daily, obviously expecting a resumption of the downtrend. Obviously, a good sign would be taking out the low of the candlestick on Friday, so 65.29.22. That would be good confirmation that the downtrend is resuming. On the weekly candle picture here, not much going on yet. Just one day of trading this week. We'll go to the monthly candlesticks. And I think I already know what it's going to look like. Monthly bearish engulfing candlestick. So here again on the NASDAQ, we had we actually had our peak a little earlier in August on the composite. Then we had a reversal candle here in September, and then a bearish engulfing October. Doji in November, another bearish engulfing in December. So certainly further downside implied here on the monthly patterns. Now on the yearly, let's see how the NASDAQ's yearly candle's looking here. And very much in alignment with the SPX and the Dow yearly picture. We have a doji reversal candlestick for 2018. So everything's in alignment there. And I like it when it's in alignment. You could almost make the case that this is a bearish inverted hammer, although a bit too much of a lower shadow there. It's more of a doji. But either way, a reversal signal nonetheless. And that's significant, as you can see, even just having a negative year is quite rare. And obviously we had a negative year here on the NASDAQ. We only had one red year there in 2011, and it was barely negative. So potential trend change here. So we'll keep an eye on that. Now that should be good for the NASDAQ for now. Oh, hang on there. Okay, now we'll go to the VIX. And on the VIX pulling back, obviously, with a bit of a bounce here on the indices. But it looks like VIX is going to be setting a higher low and potentially setting itself up to continue its uptrend and make a higher high. So we'll keep an eye on this. I guess I'll point out, even though it's been well established here, VIX in a golden cross. So VIX's 50-day simple moving average moving above its 200-day simple moving average. So that's a sign that the larger trend in VIX has certainly turned up. In case that wasn't apparent, but just worth noting there. Now, if you look at the VIX divergence tool, no signal yet, but we're starting to see basically a double bottom short term here on VIX, and VVIX is diverging and making a lower low. So no double bottom on VVIX. So we're potentially getting a little divergence here between VIX and VVIX. VIX basically holding its ground, VVIX falling a little bit further. And if that remains intact and VVIX starts rising, gets above its red moving average here, and while simultaneously we get SPX below the blue moving average, that'll be a confirmed SPX sell signal. And obviously I'm already short, but for those that want real confirmation before entering, that would be certainly a good entry signal if we do have that confirmed signal. And then obviously looking to take out the low there on SPX once we get a sell signal of 23.46.58. Okay, so we'll keep an eye on this. And other than that, that should be good. Probably won't do another video until the weekend, as I'll be tied up here for the next few days. doing some festivities. But we'll check in later. Serial Trader signing off.